Right now in the United States, there's a whole raft of different things happening at the regulatory level that are generally pretty damn bad for the entire cryptocurrency industry. In today's video, I'll be breaking down the most important things happening right now regulatory-wise in the United States and what you need to know about it. My name's Lark. Every day I make videos talking about cryptocurrency investing, so if that's a topic you'd like to learn some more about, make sure you subscribe to Lark Davis channel, tap on the thumbs up button for the YouTube algorithm, and click on the notification bell so that you know when I put out a new video. By the way, every single week my team and I produce Wealth Mastery. This is a cryptocurrency investor report. Issue number 62 came out just a couple of days ago. In that issue, we had a step-by-step DeFi tutorial on how to earn 182% using your Bitcoin over on Solana. We did a deep dive on Moon River, which is one of Kusama's hottest parachains. We had an interview with the team from Loopring discussing layer 2 solutions for Ethereum. Shared updates to my portfolio, some really hot airdrops, trending coin reports, token sales, and much, much more. All of that, of course, for less than $10 a week. Click on the link down below me here where you can learn more about becoming a member today. This is basically the next best thing to having me as your personal coach going through the crypto investing world. So definitely a lot of value there. So go ahead and check it out using the link down below. So why is this such an important thing? What happens at the regulatory level in the United States? Why, if you live outside of the United States, should you care about any of this stuff at all? Well, there's two very, very important reasons that everybody should be paying attention to what is going on right now inside of the USA at a regulatory level for the cryptocurrency industry. One is that the cryptocurrency industry in America is gigantously big. So big. So big. It's not even a word. That's how big it is. 46 million Americans, according to a recent report, now own Bitcoin. That's 17% of US adults. That's pretty damn incredible statistic. Of course, it's not just Bitcoin. As Coinbase's own internal reports show, only 25% of investors stay Bitcoin-only investors. 75% of them play in the altcoin jungle. The US is a massively, massively big market. And if anything, the crypto industry has already been stifled by Americans' difficulty to access the broader crypto market. Now, of course, DeFi has totally changed the game. Anyone in America can go and access all these decentralized finance protocols, completely circumventing the legal BS that goes on there. And the second reason that everybody should be paying attention to what goes on in America, except for, the Americans just pumping up the market with all their damn money, is that what happens in America doesn't tend to usually just stay in America. America is in charge of or deeply involved with basically every major international financial body. Financial Action Task Force, America's a huge player in that. The IMF, basically the financial weapon arm of the US government, and on and on and on. The regulations and standards that get set in the USA, a lot of other countries are going to look to that for guidance. It's very, very important that what happens in the USA, that they get it right. And obviously there will always be countries that innovate. Singapore and Switzerland, of course, they're going to cut their own path. But when it comes to quite a few other countries, they might follow in the US's footsteps, and that is not necessarily a good thing when we look at the stories we're going to be discussing today. So it's important for everybody. Obviously, we want everyone to have as much access to crypto as possible. Now, the first big story, this is one we talked about a couple days ago, the whole Coinbase drama. So Coinbase has received a lawsuit threat from the SEC over their proposed lending program. So basically, Coinbase was going to start offering Coinbase Lend, where you could put your USDC in Coinbase and earn 4% on it. Now, 4%, that's a pretty damn low rate compared to any other lender, any other centralized lender, and it's a pretty damn low rate compared to the crazy yields you can get over on DeFi. But look, a lot of people are just stuck on Coinbase, so 4%, let's keep it real, that beats the heck out of a bank account any day of the week. But how is the SEC dealing with this? So Coinbase basically went to them and said, hey, we're going to start doing this thing, and instead of the SEC coming back and saying, well, that's very interesting, here's the laws you need to follow in relation to that. They said, well, basically, if you do that, we're going to sue you, which is insanity. The SEC right now is basically saying that they are legislating by lawsuit because they have no idea what to do. They're completely lost. The politicians haven't given them any real good indications of how to regulate the cryptocurrency industry. They have no idea, so they don't want to make any mistakes. So instead of telling somebody they can or cannot do something, they just say, well, if you do it, we're going to sue you. That's insanity. That's insanity. It shows a complete lack of foresight of the regulators in the USA to actually take a proactive approach to regulating the freaking crypto industry. The fact that this is how they do it, well, if you want to do something, we'll attack you. It's terrible. And look, Coinbase is not the first to fall under the eyes of the regulators. Ripple has, of course, been in court with the SEC for months now, which is pretty ridiculous. Regulating by lawsuit is a bad idea. It's a bad idea. These guys have no idea how to handle the crypto industry, and instead of trying to do positive things, they're basically just attacking everyone, trying to crush the crypto industry. It's terrible policy. Terrible policy and terrible regulation from incompetent regulators. That is what you're seeing right now in the USA. The Coinbase and Ripple suits definitely prove that. Not that Coinbase has been sued yet, but I think they're going to take it to court. And that's far from, of course, the only thing that the SEC has been doing. The SEC is proving itself to be a very, very bad organization. I mean, if they want to actually protect investors, they would be doing things to actually protect investors. The best that they've done over the last few years is to give a few wrist slaps to giant money grabs that have happened. And those people still end up walking away with truckloads of money, and they're just now getting to stuff from 2017. Meanwhile, they have got to a few things from more recent times. One of them, of course, is Uniswap, which is a devastating blow, I think, to Uniswap and to decentralized finance overall, because you have the SEC investigating Uniswap. That's ridiculous. This is a decentralized exchange. Basically, they're coming after the developers saying, hey, you guys, we got to look into what you're doing here. You're probably doing something illegal. We're going to have to sue you guys. We're going to have to take you to court, waste a bunch of your time. It's ridiculous. Again, this is regulation via lawsuit. This is regulation via investigation. There's no guidelines. There's no clarity. Nobody knows how they can fit into regulations and comply because there's no regulations that they can comply with. They're making an unwinnable situation. And what they've done to Uniswap, I think, is a very clear indication to any developers. Do not develop in the USA. Do not register your company in the USA. Do not base your team in the USA. Get the heck out. If you have a team in the USA right now, ask them to relocate. Incorporate your company in another country, because this is what's going to happen to you. The SEC is going to come after software developers in the USA. And they've come after other software developers previously. Uniswap is not the first one. In fact, other software developers have gotten into much more trouble for operating or releasing different software that the SEC deemed to be unsavory. Will that be what happens in the Uniswap case? It remains to be seen. But you have to realize that the decentralized nature of Uniswap has meant that some pretty crazy stuff has happened on Uniswap. There have been rug pulls, there have been scams. Are they going to try to blame Uniswap for all that? Hard to say. We don't know where this investigation is going to go. We don't know what it is they're going to do. Of course, the Uniswap airdrop, is that going to be contested? Is the Uniswap token going to be the main problem here? Time is going to tell how all this is going to play out. But again, the message is clear to anyone offering a decentralized service. The USA is not the place to be doing that, at least not at the time being. So the SEC is trying to push innovation overseas and basically trying to say no to an internet-like opportunity. The growth that has happened in the USA from all the tech companies, most of the world's biggest tech companies, the household names, they're all American companies, because in the 90s, the government decided, hey, we should not destroy the internet. We should get out of the way and just collect our tax money and make sure it all works just fine. They're not really taking that stance with cryptocurrencies right now, which is unfortunate. Another story here. This is again from the SEC in the USA. The SEC chief has said that many crypto tokens are likely going to be securities and fall under the agency's jurisdiction. Now, what that would mean is that a lot of the coins trading in the USA right now on US markets, coins trading on FTX, coins trading on BINANCE US, coins trading on Coinbase, coins trading on Gemini, coins trading on Bitstamp, whatever other US exchanges there are, a lot of those might end up being delisted from US exchanges if Gary gets his way here, if this actually gets pushed through as he's alluding to here, because essentially what we would see would be basically a short list of coins that US investors are allowed to buy. Everything else would probably be delisted from exchanges. So we might see 20, 30 coins that US investors are allowed to invest in. That's, of course, ridiculous, but I would not be blown away to see that being the case. Again, this is another attack on the cryptocurrency industry. It's telling you what you're allowed to invest in, and it's ridiculous. This kind of approach to regulation reminds me just so much of like the whole GameStop thing, right? Where the GameStop thing started happening, people were making tons of money, they're pumping the markets up, and what did they do? They came in, they stopped trading. They can't stop trading on decentralized exchanges. This is the thing. They can't control these markets. It must be driving them crazy. They can't manipulate them. They can't ensure that their hedge fund buddies are getting the bailouts. They can't ensure that their hedge fund buddies are winning, because that's exactly what happened in GameStop. They stopped trading. They made sure that the hedge funds, besides the one or two that got crushed, but the other guys, they made sure that they were not going to get crushed. They made sure that they could cash out. They made sure everything was going to be okay for the big guys. The little guys got screwed. People saw that. That's exactly what happened under the SEC's watch. That's how business operates. Here they are now, going to tell you what coins you're allowed to buy, where you're allowed to speculate, what you're allowed to own. It's ridiculous. It's ridiculous, but this is exactly the direction the SEC is trying to push cryptocurrency regulation into. Sure, you'll still be able to buy Bitcoin, you'll still be able to buy Ethereum, your Litecoin, whatever else. There's going to be a list of approved coins that U.S. exchanges will be allowed to list. But it's not good. Again, complete wrong direction for the markets to be taking. And the politicians need to take the reins here, because the SEC is really overstepping here and making it clear that the US will not be the leader of the crypto markets of this decade, because they're going to push all the innovation offshore. Great opportunity for other countries, mind you. Now, another bad call from the SEC. It's all about the SEC today. We will get to the Congress here in just a moment, because they're also doing some bad regulation. But Gary Gensler, he came out and said that, well, I would be open to seeing a Bitcoin ETF, but not a spot Bitcoin ETF. So a spot Bitcoin ETF is where you take a Bitcoin and you issue out a piece of paper that can trade on a stock exchange or in your brokerage account, and that's actually backed up by a real Bitcoin. What he wants to see are ETF products backed by the CMEs, one of the biggest future exchanges in the world, right? Wall Street's big buddy here, Gary. What he wants to see are the worst kind of products. So you're going to have a bunch of basically derivative Bitcoin. So the CME contracts for Bitcoin futures, they're paper-backed contracts. There's nothing behind them. Wall Street wants to take control of the price. They want the CME to be the price indicator of the entire damn market. And when we start seeing these futures-backed Bitcoin ETFs becoming more and more popular, that's going to bring more and more money into the CME futures products, and it's going to give Wall Street more and more ability to manipulate the markets. It's bad news bears for Bitcoin. This is exactly not the kind of Bitcoin ETF products that you want. Spot Bitcoin ETF products are great. Futures-backed Bitcoin ETF products, especially when they're going to be the only thing that he's said he's willing to approve. He said he doesn't like spot Bitcoin ETFs. He only wants to see futures products backed ETFs. That's bad. That's bad for the market. Again, another horrific call from the SEC here. Which brings us on to talking about the Congress. So it's now passed through the Senate. It's now gone over to the House of Representatives. This is, of course, the infrastructure bill. This is a very, very controversial bill for the cryptocurrency industry. And it may be going through as the original wording intended. Basically, what this would do would expand out the idea of who is a broker and who needs to have a broker license to a wide range of people who will never be able to comply with those requirements. So that's people who are mining cryptocurrencies. That's people who are staking cryptocurrencies, and potentially people who are even running nodes for cryptocurrencies. You're suddenly going to have to be a broker dealer, according to the wording in this bill, which has not been changed yet. There's been people who have proposed amendments. Now it looks like they may not be taking any more amendments. So we'll see, of course, how that plays out. The vote for this is coming up in about 2 weeks' time. So we shall see what actually happens in the end. But it looks as though we could see the original wording of the bill go through, which that wording is bad. Now look, the Treasury Department's come out and said, hey, but I know the wording looks bad, but we're not going to enforce it like that. If you're not going to enforce it like that, change the damn language in the bill. Don't trust Janet Yellen. Do not trust Janet Yellen, man. That lady is not our friend. She's not on our side. She's on the side of Wall Street. And it was her Treasury Department that handed off this written amendment to stick into the infrastructure bill. They handed it off to some patsy in the Senate. He stuck it in there, and now it's there. This guy had nothing to do with crypto ever before. He's just a tool for the Treasury Department. And so here we go. They're going to pass this law that's going to, again, make developers go overseas. It's going to make it much harder for regular people to use cryptocurrencies in the United States. It's going to push everybody to centralized services, and it's going to greatly limit the kind of offerings that even those centralized services can offer. Remember, the SEC is going to sue Coinbase if they dare to launch a lending product with an abysmally low rate. Even then, better than a bank, but one of the worst in the crypto industry, actually, at 4%. It's a crazy, crazy situation. It seems like the SEC and U.S. politicians are working overtime to ensure that the U.S. is not the leader of the cryptocurrency industry. And look, this is nothing new. This is nothing new. If you're a U.S. investor, you probably have been realizing how much you've been getting screwed by your regulators and your politicians in regards to crypto in particular for a long time. You can't invest in any of the token sales. Ever since 2017, no U.S. investors have been allowed into any token sales because the SEC will come after the token sale provider and crush them. The SEC trying to crush lending. They're going after BlockFi. They're going after Coinbase. I'm sure they're going to be coming out after other lenders that allow access for U.S. citizens. They will be next. Cannot have people making good yield. You got to go and put your money into your bank account so that JP Morgan Chase can make all the money. You can't make all the money, man. Of course, we have the infrastructure bill attacking staking and mining. We have airdrops. You can't even get airdrops now in the United States because people are so afraid to give a token to an American because the SEC will come after them. And that means that if you're a U.S. investor, you're potentially missing out on tens of thousands or hundreds of thousands of dollars of free freaking money. DYDX just did an airdrop. Some people got $100,000 of free money from that airdrop. That's crazy. Of course, the Bitcoin ETF futures-backed ETFs, bad news bears. Leverage options in the United States have been heavily limited for a long time. Remember, you can't trade on 20x leverage or whatever in the USA, but you can go down to the corner right now, spend your entire life savings on lottery tickets with an almost guaranteed chance that you're going to lose all of your money. That's approved, but you cannot trade on leverage if you're in the USA, at least not at any higher levels. And of course, accredited investor laws in the United States basically are a keep the rich rich and keep the poor poor kind of law that only if you have more than $1 million are you allowed to invest in pre-sales or pre-IPO stuff. Again, absurd, ridiculous. And if it seems like they're trying to keep you poor, maybe it's because they are. Maybe it's because they are. Anyway, I really hope that the SEC gets its house in order here and stops trying to crush innovation in the USA. I really hope that US regulators do something about this infrastructure bill and get the crypto regulations within that bill to be more in line with what the industry actually needs. Either way any of this plays out, I don't want it to play out in the bad directions because it's just not good for US investors. But regardless, even if it does play out to all the worst things, if the SEC says no lending, no leverage trading, yes, we will approve Bitcoin ETFs, but only futures-backed ones, no airdrops, no token sales, and we're going to bring out this infrastructure bill, which means that no staking, no mining, any of that stuff. Well, the silver lining of all that bad regulation would, of course, be finally getting some damn clarity on what is or is not allowed in the USA for cryptocurrency investors. That clarity, of course, would just be very bad clarity that wouldn't help anybody except Wall Street. There you go. Anyway, just my 2 Satoshis for the day. Your question. Do you think that we're going to see a turnaround in opinion here and that we're going to see the US actually making some more common sense legislation towards the cryptocurrency industry? Or do you think that's it and it's probably going to get worse? Curious to know your thoughts down below in the comment section. Thanks so much for watching today's video, and peace out till next time.